Hi everyone. Okay, let's go over the exercises that I assigned for section 6.3, which is all about the cost volume profit analysis and therefore trying to determine fixed costs, variable costs, and also mixed costs. Okay, so question one, problem one, list of costs. Each one of them is either variable, fixed, or mixed. Let's have a look. Cost of raw material used in producing the firm's product. Definitely variable. Okay, so if we're making something, if it takes a pound of material to make one, then it's going to take 2 pounds of material to make two. So therefore, the costs go up as in direct relation to the number of products we sell. So therefore, it's a variable cost. It changes in direct relation, whereas fixed doesn't. And property taxes are a fixed cost because even if we don't sell any products, we still have to pay our property taxes. Okay. C, wages of sales staff paid on a salary plus commission. So there's two different costs there. The salary paid to the sales staff, so therefore no matter what, they get that amount of salary. That there is a fixed cost, but the commission is in direct relation to how many products they actually sell. So that would be a variable cost, which would make it a mixed cost. But luckily, those types of costs are very easy to isolate which part is fixed and which part is variable. Wages of hourly paid production line workers, definitely a variable cost. The site license for software is a fixed cost. The leasing costs for a delivery truck, that's a mixed. As you can see, you have to pay $600 per month plus 40 cents per kilometer. So this one, instead of being direct relation to the number of products that we sell, it has to do with the number of kilometers that we drive. Packaging materials for products, variable, and fixed cost is for insurance. Okay, so let's have a look at number two. Number two, you might have found a bit tricky. So a company's sales revenue for a certain period, so maybe last year was a certain amount, and then this year it decreased. The total amount of sales revenue went down by 15%. And then here's the part that you really have to pay attention to. Assuming no change in the prices of its inputs, so the variable costs associated with the production, or its output, and that would be indicating that the selling price per unit has not changed. So by what percentage did fixed costs change? It's saying that none of the inputs or the expenses for the company changed, so there would be no change. Unit variable costs. So if there was no change in prices for the inputs, then the unit variable cost would not have changed at all. But the total variable cost would have changed by the 15% because remember, your variable cost changes in direct relation to your revenue. So therefore, if revenue went down by 15%, the variable costs associated would have gone down by 15%. Okay, so number three, Triax Corp produced 50,000 gizmos at a total cost of 1.6 million. In that 1.6 million is fixed costs of 400,000 in the fiscal year, the year that just went by. If fixed costs and unit variable costs do not change for next year, how much will it cost to produce 60,000 gizmos? Okay, so we need to figure out what is the variable cost per gizmo. So we know the total cost, including fixed and variable, is 1.6 million. We know 400,000 of that is fixed. So therefore we know the variable cost is 1.2 million. So of that 1.2 million variable costs, we know that we produced 50,000 gizmos. So 1.2 million divided by your 50,000 gives you $24 per gizmo of variable cost. So if we're looking to produce 60,000, then we want 60,000 units multiplied by $24 per unit variable cost gives you 1.44 million. Add on to that the fixed costs, because the fixed costs don't change, and that gives you total costs of 1.84 million. Hope this helped. Thanks, everyone. Let me know if you have any questions.